All right. Hi, everyone. Welcome to another Timing Research special event. Uh, I was able to get Serge Berger to come back and give us his 5 hot stocks to watch this summer. So, of course, this presentation is for educational purposes only. Trading is not suitable for all people. And please consult with a financial advisor and only trade with money you can afford to lose. This session is being recorded and will be available on timingresearch.com, as well as if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you can find all the recordings there. So, um, yeah, like I said, Serge Berger was nice enough to come back to give us another session, and I'm going to go ahead and turn it over to him.
Perfect. Thank you, David. Much appreciated. As some of you guys heard before, David and I were just talking about the 5 stocks that I'd like to share with you, wondering if we want to give them to you right up front here or a little bit later. But we decided to just kind of start off this way right away. Um, Basically, I think actually before we even get to the 5 stocks, and I'll look at those here in a minute, what I see as a huge opportunity in the market is essentially finding these extreme overbought and oversold um, stocks or ETFs or futures. And you can see that, for example, here, and we'll get to this in just a bit. But for example, this here is the NASDAQ 100 yesterday. This is an intraday chart on the 5-minute chart. And so my algorithm essentially finds when something's extremely overbought or oversold. And you can see when those 3 arrows appeared. So once that last arrow, once there was no longer an arrow printing, and we'll look at this shortly, it was basically time to either short or buy puts, or if this was the futures contract, short the futures. And you can see from literally it literally top ticked yesterday's intraday move in the NASDAQ 100 and the S&P and the futures as well. And from there, it ended up basically dropping about 1.5%. Like with one futures contract and a SPY, this would have resulted in about a $3,000 profit. So there's so many opportunities like this right now. There's one in Apple on the daily chart, and so many stocks also getting oversold, like Nike. We'll look at this here in just a little bit. But before we get into some of this stuff, I just thought we would take a few minutes and kind of go through what I think are some of the really outstanding opportunities for not necessarily just this summer, but I think this could really play out sort of the back half of the year. And for that, let's have a look at this chart here. I'm going to make this larger, and let's have a look at it. So essentially, the patterns. Let's look at the pattern first, and then we'll look at each individually and go a bit deeper into it. But what you can see here as a pattern is that each of these tickers, 2 of them are ETFs, 3 of them are stocks, um, have either already broken out or uh, are retesting the previous breakout, or are about to break out. So each of those 3 things are fair game. So in no particular order of significance. At the top, we have ExxonMobil. Freeport-McMoRan is second. Gold by the GLD. IBB, this is biotechnology. And then we have Coinbase down there as well. And so if I go into each one of these here for just a couple of minutes, here's what it looks like. I'm going to make this a white background color so that everyone can see this, and also so we stay uniform with what I showed you a minute ago. So let's start off with ExxonMobil. It's not really just about the charts. In fact, it's not really about the charts. It's about the charts and the combination of really the big picture setup. But ExxonMobil probably has plenty of tailwinds here. This is both a secular and a cyclical story, which is to say that we could probably see upside from a longer term perspective, like 5, 10 year, which is very, very likely. Um, and also, the next sort of 6 to 12 months as well. But ExxonMobil, if you're just caring about the technicals, essentially what it did earlier this year is it attempted to break out into the spring, but because it's inversely correlated to tech stocks, meaning funds are were basically forced to buy tech stocks again because they were underperforming their benchmarks into the May, well, parts of April and in May and certainly June. We saw Exxon pull back again. We think ultimately Exxon breaks out and goes into the 130s. But again, the long-term secular story is even much more powerful through the lens of energy. So that takes care of ExxonMobil up there at the top as one opportunity. Then we have Freeport-McMoRan, which is a story that is very much related to the copper trade. Copper has been there's been serious underinvestment in copper mines, and we all need copper for the electrification of the world, not just cars, but everything else is electric these days as well. And so, if you want to look at just a chart, you can kind of see this. But the price of copper, which is closely correlated to this, is probably an even more powerful story. But I think ultimately, Freeport-McMoRan is probably a double over the course of time, and the price of copper probably more than a double, honestly, over time as well. So that's another one we're looking at. Here we're looking at probably 60 to $65 in sort of an intermediate term time frame is what we could potentially see. Um, the third one is gold, and gold is, again, this is a macro story through the lens of, why are people buying gold? It's not so much that people are buying or gold, they're selling dollars, particularly when it comes to central banks. And so what we've seen with gold is we've seen a significant move higher this year. We have been long gold since about September, October last year. It's pausing right now, so there's no real momentum in it right now. But if momentum comes back in, I think the GLD could probably go to 250. And again, this could still be a story for this year. So that's another one. And again, there's both a macro and a cyclical tailwind to that. So that's the top three, or the top three as in just literally physically going from up here to down here. That's not in any order of higher probability. IBB, biotechnology, this really goes into the secular and cyclical tailwinds of healthcare, which is extremely, extremely promising if we look at it through a multi-year lens. From a sort of year to 2024 perspective, at some point, healthcare could get a bit political given we're in an election cycle year, but there still is a lot of potential for investor portfolios like funds to rebalance some of their tech exposure. They're already doing it, by the way. We talk to institutional investors, among them our clients, every single day, and they're doing that already. They're rebalancing some of their tech exposure, mega cap tech, into things like biotech and other parts of the market. And so IBB is a growth story. This is an ETF that captures the large cap biotechnology industry. And we think IBB, again, ultimately a lot higher. Just the one thing that here could pause these things is just a political, again, the elections, U.S. elections basically this year. So we have to keep that in mind. And then last but not least is Coinbase here at the bottom chart. And Coinbase really would be a story for Bitcoin, meaning if Bitcoin were to make a move, then we could see, and by the way, Bitcoin and gold look exactly the same, and Coinbase looks the same. So that's in many ways the same trade. But I do think gold and Bitcoin has another rally attempt in it. And, Coinbase essentially is the custodian for many of those new Bitcoin, US listed Bitcoin ETFs. And I'm not sure about some of the foreign listed ones, like the Australian ones and things like that. But certainly for a good part of the US listed Bitcoin ETFs that got launched in, I think it was January, February at some point. And so there's a big story there. But again, it's basically a correlation to the price of Bitcoin. So if anyone has any questions on these, I'm happy to go into it more. If you have any pressing questions right this second, right now, I'm happy to address those. Otherwise, we can come back to this here in a little bit. But those are some of the stocks that we're looking at. And again, if you just purely like to draw lines on a chart, then you would see that each of these five names essentially have either a breakout where the stock or the ETF is checking back to support, or it's about to break out, or it's already broken out and it's now consolidating, like in the case of gold or the GLD ETF. So those are essentially um, the three patterns here. And again, each of them is backed up by a good story in terms of what's available here from a macro uh, tailwind perspective. So, those are things we're watching. But I think in addition to this, there is a massive opportunity now going into the second half of the year where we can take advantage of what I consider to be extreme overbought and oversold situations in the markets. So as I was alluding to before, this is literally just yesterday. This is an intraday chart. I don't know how many people in here are day traders, but this is using my Vertical X Pro algorithm. It's something I developed at JP Morgan, and I'll show you this here in a bit. But these are the kind of opportunities that we're seeing happening right now. They happen on the daily charts as well. Like for example, here's Rivian, which got extremely overbought the other day, and then now it's pulling back already. It got oversold earlier this year, and then it rallied, 40%. So these are just unbelievably juicy opportunities. And I think where there's a big disconnect in the market right now is what people see in terms of volatility on the surface in the market. So let me share this with you. I'll make a very simple, clean chart so you guys can all see this. So everyone is looking at the VIX, right? So that's essentially, I'm going to make this a line chart because I think some people have an easier time with this, but actually, no, there you go. So this is the VIX, and everyone's saying, oh, volatility is so low. The VIX is at 12. What this does not capture is the volatility within the stock market. So again, you look at something like Nike, right? Which, Jesus, if I could type in the proper ticker, which just totally collapsed 20% yesterday. And I'll show you guys in a few minutes how this stock is now getting oversold by our work. Or Apple, which had a huge move to the upside a couple of weeks ago, and it's now getting extremely overbought. And I'll share this with you in a minute as well. Or we looked at Rivian, and again, or WBA, which is Walgreens Foods, which is now getting extremely oversold. So there's a crazy amount of opportunity with underneath the surface, underneath the SPY, underneath the QQQ. Again, the whole market now, the US market is made up of essentially 5 stocks that are the only thing that matter from an index perspective. But underneath the surface, there's a crazy ton of opportunity. And I'd like to share this with you guys today, right now. But this also applies intraday, as I said before. So, for example, the Nasdaq 100, or I don't know if anyone here, trades intraday or trades futures, but like that exact same move that I just showed you there also happened yesterday in the S&P 500 futures. This is the E-mini contract. And you can see, as I showed before, our Vertical X Pro indicator told us, like, literally top ticked the market. And it does this quite a lot, where it said, hey, finally on that bar right there, like, see how it was the high for the day, for the week, for like everything basically. And that's where it said, hey, be careful. This is probably going to start going down. And sure enough, from that point on, the S&P actually dropped as much as 1.3%. So capturing, even just 80% of this move would have resulted in about a $3,000 gain being short just one ES futures contract, right? Yeah, you can kind of look at it that, Deborah. It's when the markets overshoot, right? Markets tend to go too far to the upside and then too far to the downside, where a lot of people get caught off guard. So I can tell you guys this story real quick. I'll just bring up the slide here so you can see this. But essentially, when we were, I should probably introduce myself quickly. Let me just do this because I have to do this for legal purposes. First of all, this is me. I'm Serge Berger. I originally come from more of the investment banking background, and then moved on to the buy side, as it's called, where I'm a portfolio manager at Blue Marlin Advisors now, and also the founder of the SteadyTrader.com. But one of the things that I learned over the course of my career, and this is now applicable to equities, ETFs, options, futures, all that stuff, is when I was working at JP Morgan on the investment banking side, a couple of managing directors and I, on the side, outside of work and outside of the premises of JP Morgan, we were basically trying to find out what constitutes extreme overbought and oversold in the markets? Again, not a little bit overbought, not like MACD or RSI overbought or oversold. Like that's run of the mill. Everyone can look that up. That's not hard. But really silly extreme overbought and oversold, where we have something like an 80, 85% chance of a profitable trade over time. And so I should say, when we look at this, it's something that we can look at through the lens of almost any time frame. It can be intraday, it can be on the daily charts, and so I'd like to share this with you guys right now. But at the end of the day, it kind of looks like this. Before we look at the live charts, you can see when something gets extremely oversold. And again, I'm talking a crazy level of oversold, not just a little bit, like really a ton oversold. We get these up arrows. And then the stock or ETF in question or whatever it is, futures contract will tend to bounce or at least consolidate. You can see it here in AT&T, same thing. This can also happen in futures, like I showed you intraday. I'll go back to that in a minute. And also when something gets really overbought, which is what I showed you a minute ago. Like this is a stock that got extremely overbought, and then you can see how it just goes lower. So because markets overshoot, but the traditional measure of MACD and RSI, which I'm sure everyone is using or may have heard of and has access to on their platform, is not something that's good enough because everyone's using the same thing. I'm not saying that doesn't work at all. That would be arrogant to say because that wouldn't be true either. But to me, it's not good enough. So when we were developing this, when I was at JP Morgan, we were looking at where do markets typically overshoot and undershoot and then start to mean revert. And as Deborah is saying, it's kind of like fake out moves. When is it too far, right? And there's a huge amount. Like I'm not sure I've seen as many of these kind of opportunities right now as I'm not sure I've seen more of these opportunities ever. There's so many of them right now, but they're happening again underneath the surface, meaning if they're not happening in the S&P 500 necessarily, because the S&P is dictated by 3 or 4 stocks, the NASDAQ too, although those opportunities are happening intraday on those indices right now. And they will at some point, maybe before too long, start happening on the daily charts as well. But just to kind of circle back to this, so this is just literally just yesterday on the S&P 500. Again, this is the futures contract, but the same exact thing happened on the SPY, on the QQQ. I can show you that real quick here. So this is literally just yesterday, the day session, right here in the United States, or in NASDAQ futures, and it literally just top ticked the market. In fact, I'm not even sure. I haven't checked this yet. Let me check something. It may have top ticked it for the entire quarter. Let me check something. Yeah, I think this literally top ticked the market for actually ever so far. Let me be clear. I'm not proclaiming this will be an all-time ever top. I don't know that. That would be arrogant. But like that. So this is the daily chart. Let me try to point this out to you. So this here is where yesterday's intraday move, which topped right here. This right here. Does that make sense, Deborah? And I think there were some other people before we got started that were kind of alluding to that. So, I think these are huge opportunities. Now, intraday, it depends on what my time frame is. If I'm an intraday trader, then I personally like to do directional trades. If I'm more of a swing trader, then what I want to do is I want to use this more on the daily charts, in which case I personally like to do what's called an options credit spread. And I'll share this with you guys right now, but we'll come back to these examples, and then I'm happy to go back to the top 5 as well for those people that may have missed them here a few minutes ago. So let's just go into this, and then we'll come back to all these and address any questions. If you guys have tickers you want to look at as well, obviously just let me know, and we'll be more than happy to go into those. But let me just give you a little bit more of the storyline here so you can kind of get your head around it. Essentially, what a lot of people are doing right now is what what John did, and John came to me because he was basically blowing up his account using short-dated options. And so what John did is he had his account, which was he built it up in January. This is last year. He built it up to a gain of $1 million. You can see this. This is his actual account, like um, screenshot. I'm not making this up. And you can see it was almost $1 million, and then he lost it all in 3 weeks. And the reason he lost it all is because he was using short-dated options. And I don't think people understand right now how risky short dated options are. Um, and that's there's a huge risk right now with short dated options. So I'm going to show you guys what we do to circumvent that problem. But basically, we don't necessarily expect the market to fall apart here, but we do expect lower stock market returns going forward. And that's already starting. And I think we're going to get to a point here where people realize, unfortunately, with some losses first, that there is a lot more uncertainty and a lot more the markets are much less stable underneath the surface than we think. We have the Nvidias, you have the Microsofts of the world, no doubt, right? Good companies, although their growth will slow at some point, of course, that's normal. But there's nothing wrong there in terms of what those companies are doing. It's what's happening underneath the surface that's more problematic. And so, what I always tell people is, if you want to take advantage of the markets and you want to sort of build an income, and I have one important question for you guys in a minute. We have to have something that's extremely repeatable to do. And this is for me, for the past 26 years of being in this business, this is the most repeatable strategy that I've ever developed. And it doesn't require a lot of time. And so uh, I'd love to hear from you guys. How many people in here are looking to generate an income, some sort of an income, whatever that's quarterly or a monthly or whatever it is, from your portfolio? Type in yes or me into the chat box. The reason I'm telling you this is because I think a lot of people have that goal, at least as part of their goal, but they are using strategies that are extremely linear and extremely highly correlated just to the S&P 500, right? And so it's a great goal to have, but just realize how closely correlated most of strategies that try to achieve that are to the S&P 500. And so if you look at the chart of performance of the S&P, you can see the S&P has good months and bad months and everything in between. And if we use linear strategies that are basically directionally exposed to the S&P 500, which most people are, we have almost no chance of making money on a very consistent basis. And that's frustrating for people. I understand that. Trust me, I've been there, and we deal with people every day who struggle with that. So what I'd like to share with you today is how we can take advantage of these extreme overbought and oversold situations, like I just showed you here in the NASDAQ 100. We'll come back to all this in just a few minutes, but in a way that allows us to generate an income. And so what a lot of people do is they have good trades they do, kind of like this mountain range here, and they will work themselves up the mountain range with a bunch of good trades, and then they lose all those gains with a couple of trades, and they start right back from the beginning, and then do it again. They work up the mountain, with a bunch of good trades, and with a couple of trades are right back from the beginning, and so on and so forth. And that's very frustrating, and really no way of making money in the markets. And then because of that, we end up becoming frustrated. We ended up sort of over trading, and our risk management goes out the window, and it just turns into an ugly situation. And so I'm just going to skip through a couple of things here. What I propose is something that's very, very repeatable. What I've learned over the course of my 25, 26 years now as a professional investor and trader in the portfolio manager side, on the investment banking side, is the more something is repeatable, the more we have a playbook, a repeatable process, the easier it is for us to stick to it, and ultimately the better our profits can be. And so to me, the repeatability is the most important part. Everyone can tell you their strategy is low stress and high probability. I can tell you that, everyone can tell you that, but that's really not that important. What's most important is that it's repeatable. And when you look at markets, markets overshoot. Just like we were saying before with Deborah, right? You have these steep moves that go vertical. And when these steep moves go vertical, at some point they overshoot and the market will pause or correct for a time. That can happen to the upside, like here in this case, and when we get extremely overbought. But it can also happen on the downside when something falls apart, when it goes from a steep slope to a vertical drop. Does that make sense? Right? And so basically, when that happens, we get mean reversion move. And so what a lot of people are doing right now is they're using short dated options. And short dated options, as I'll show you in a minute, are actually very, very dangerous. That hasn't been the case so much for a lot of people because the markets have been in a going higher in a low volatility way. But once that stops, and I'm not here to forecast doom and gloom, I'm really not. That is not the point at all. But normal functioning markets have volatility bursts, and that typically leads to catastrophic losses. Um, and so let me show you how this works because we're going to do these 4 steps here in a very simple, repeatable manner. So let's get into this. Again, we're looking for really steep moves that go vertical, exactly like I showed you guys before, even intraday. So remember I showed you before in the NASDAQ 100 yesterday intraday, and I will get to this question here. From a bunch of you guys were asking, how do you do this trade? I will show you this exactly how we do that. We even actually shared it yesterday in real time with our clients in our chat app that we have for clients. And I'll bring this up here in a minute. Okay. Yeah. Let me see here. Let me make a quick note here of some of the questions here. If you give me just 1 second. Yeah. All righty. 1 second. Yeah. All right. Perfect. So sorry about that, folks. I had to just make sure I write down some of the questions so I can get back to them later. All right. So what I was saying before is that we're looking for these steep slopes that go vertical. And so one way to measure that is with simple, MACD and RSI, which are just not good enough. What we have found over the course of time is that we need to be much more granular with this. And so in order to find what is extreme overbought and oversold, we need to be more sophisticated than that in our experience. And so the way we do that is we start with an understanding that markets mean revert, right? And particularly and really only when they get at extreme levels, to extreme levels. Like for example, Facebook or Meta as it's called. You can see every time it went from steep to vertical, it would pause. And it would ultimately mean revert, but it more importantly would pause. And so what we like to do in those situations is if it's intraday, I would do a directional trade, right? If it's an intraday opportunity, I would just literally buy a put or I would short the futures. Now, again, we'll get to this here in a minute to address some of those questions. However, if the opportunity provides itself on a daily chart, like for example here in Meta, what we typically like to do, and I'm just bringing my chart over here, is we typically like to use what's called an options credit spread. So I'm going to quickly bring this chart over here so you can see this. Give me just 1 second. Bring this chart over. Because what we need to understand with markets going vertical is that there are a lot of factors that take that have to be taken into account. And again, that's why typical MACD and RSI relative strength stuff doesn't typically work very well. So here, for example, is Meta. And you can see that when the stock was moving higher, every time it would get to the upper end of that range, and you can look at this range this way, it would start to pull back. So for example, here, this point in time right there, what we ended up doing is we ended up spotting that the stock had overbought by our indicator work. But instead of doing a directional trade, what we typically like to do is we like to do an options credit spread. but using options that expire further out in time, and only holding the trade for 2 weeks. And the reason why that's important is because if we use short-dated options, we will blow up our accounts. Again, I realize it hasn't happened for a lot of people in a while because we've had a low volatility market, but ultimately that does happen. And so what we like to do is we like to just go in here and we like to do what's called, in this case, a bear call spread, where we can make money as long as the stock will stay below a certain point. So in this case, you can see the stock got very overbought right there, and it might go sideways, it might go lower, and it might go a little bit higher, right? I can make money in each one of these three situations. If instead of buying a put here, I simply sell an options credit spread. So I would sell an option up here, buy a call against it, receive money up front, and as long as it stays below that line right there, I can make money. So that means I can be right. The stock goes down, I make money. It goes sideways, I make money. And even if it goes higher, in this case, like 8%. So I could be totally wrong. The stock could go against me 8%, I could still make money. So that's how we like to do it in the daily charts. But none of this really is all that helpful unless we have a way in which we can actually find when is something extremely overbought and oversold. And so I'd like to share with you how we find this stuff. So we built our tool on, it's a web-based tool, which is to say that we access this directly from our members website. And so all I have to do is click basically one button right there, and it opens up this tool right here. So it's in a tab on the browser. And just to give you some ideas, you can see how this turned out on the daily charts, and we'll go through a lot of these examples right now, so you can see how this works, and honestly, more importantly, why it works. I think that's probably at least, if not more important than than how it exactly works. So let me just get to this. And if you guys have any tickers, please let me know. But I'm going to start off with Apple because I know everyone knows Apple. And so Apple got extremely overbought. This happened now a few days ago. And so far, the stock is going nowhere. So what we're able to measure here is when does something get extremely overbought or extremely oversold. And in this case, you can see Apple got extremely overbought. Can you all see that? Right. And so we're at a point now where the stock may go sideways, it may go down, or it may even just go a little touch higher. But what we did here about a week and a half ago or something like that is we simply sold an options credit spread so that we can make money whether the stock goes down, whether it goes up to a degree, um, or whether it just goes sideways. And so far, the stock has done nothing but go sideways. And we're making money with this. In fact, we're at almost at 30% profit, right? So once the stock gets overbought, extreme overbought, this is what we're doing. But again, the key here is what's the algorithm, or how do we measure that this stock in this scenario, it could be an ETF, could be futures contracts, is extremely overbought. So that point right there, we need to be able to pinpoint that point. And then, of course, putting on the credit spread is one way of doing it. Again, intraday, we do directional trades, and I'll show you that in a minute. But let me just look at some other examples. And again, if you guys have stocks you want to look at, just let me know. FedEx is getting really overbought right now. Let me show you this. So you can see FedEx right here on our scanner. It's got a 0 days old, so it's getting extremely overbought. And you can see last time it got to this point, it then ended up dropping like 15%. So the algorithm is very finely tuned to what it means for something to be extremely, right? Extremely overbought, not just a little bit. And so we typically use options for this that are expire between 55 and 85 days out and only hold the trades for 2 weeks. So in the case of Apple, Because if we use short dated options, ultimately we blow up. I know, and I realize a lot of people haven't experienced that yet, but if you do this long enough, you realize that's what happens every single time. It's a question of time. It's a when, not if. And so when we opened up this Apple trade, we used September options. We sold a call way up here, bought another call against it, and we're just collecting money right now. As long as the stock stays below that point, we're making money, right? Which is really cool. Um, if you guys have tickers, just let me know. But like CRM is one that comes to mind. Got really oversold a few weeks ago. Can you see that? So it got super oversold and then it basically rallied like 20%. Now I can buy a call when that happens, but if I buy a call and the stock doesn't go higher, I'm not making money. Because yes, the stock in this case did go higher, but it could have just as well gone sideways, right? So what we like to do is we like to sell a put below the market, buy another put against it for protection, and just keep it on for 1 to 2 weeks. That's it. We're not looking to keep the trade on for very long. And again, intraday, I'll show you in a minute. Intraday, we like to do directional trades. I don't see a signal in DJT. And I think someone typed in now. I don't see a signal in now right now. So none of those stocks are extremely overbought or oversold right now. So ARM is not extremely overbought. It was at one point, and then it just went sideways, which is perfect, but it's not there yet. And now is also not overbought yet. So this is the power of having something like this, right? People think something might be overbought or oversold. It's really not, right? You need RSI, MACD are not good enough. I'm telling you that. There's too many algorithms out there that are basically fine-tuned to take advantage of retail investors that are using very, very basic standard run-of-the-mill indicator stuff that just doesn't work anymore in this world. Right now, so FedEx is extremely overbought right now. And again, you can see what happened last time when it got overbought. So watch this one for next week. If we're looking for the oversold signals, right now Nike is getting extremely oversold, right? I'm not sure it needs another day or two until the arrow disappears here. So if all of you guys who would like access to this tool, I'm happy to give access to this later. I'll show you how you can do that. But Nike is getting to this point, and last time Nike got extremely oversold. Look what happened. The stock ended up rallying 63%. I'm not here to tell you the stock's going to rally 63%. What I'm telling you is that the indicator is really fine-tuned to help us when something extremely is at an extreme, right? And so again, if you're using run-of-the-mill stuff, Bollinger Bands too, Bollinger Bands, MACDs, all that stuff, I'm telling you, it is not good enough. We went really deep on this. We tested this sort of stuff for a year and a half while I was working at JP Morgan. And so the math behind this is what ultimately really works. It's not enough to use the basic stuff. You have to go deeper and find and understand where algorithms like the big Wall Street algorithms come in and start buying again, or at least stop selling. And so Nike, you can see it's getting very oversold now. It needs another day or two until the arrow disappears. So like, for example, last time we got a signal, let me just make this large. So last time we got a signal, that once that arrow disappeared that following day in October there, that's when it became valid. Right now, Nike still has an arrow. So maybe early next week, that'll disappear. Right? That's how that works. Does that make sense to everyone? It's sure. Let's look at a few others. Target comes to mind. So like Target, look at this. So Target got extremely overbought. So let me show you this. Target got extremely overbought there in March, and then it quickly dropped 6-7%. We're not looking to hold this for all that long, typically 1 to 2 weeks, and then you can see how the stock basically dropped. So in this case, I can buy a put, but I typically like to do in this case a bear call spread, where I sell calls up here, or in this case when it got oversold and then the stock rallied 12%, um, what ends up happening is I can sell a put spread. So I can sell a put down here and then buy another protected put below it, keep it on for 1 to 2 weeks, and that's it. That's how it works. So we wait for the end of day on the daily charts. Intraday is of course intraday, but I'll show you that in a minute. That's much, much quicker. Or what else was there? Like Palo Alto Networks got extremely oversold a little while ago. And then very quickly over the next few days bounced 23%. These are extremely vicious moves, but it doesn't have to be a directional move. Like Palo Alto Networks, it overshot on the downside. I think Nike's overshooting on the downside right now, but it doesn't mean the stock has to go vertical right away, which is why I like to, in this case, sell a bull put spread. So sell a put down here, buy a protective put a bit lower, and keep it on for 1 to 2 weeks, and generate that income. So if all of you guys who said before that you're looking to generate income in your portfolio, this is how I like to do it, because I don't have to be directionally correct as much. So like in this case, the stock, like I said before, the stock does not have to go up for me to make money. It could also go sideways and I could make money. You know? So it's mean reversion, but it's really more about the stock getting exhausted in one direction or another. Just like I think Nike, as you guys saw a minute ago here, Nike and also Walgreens, by the way, are reaching extreme oversold readings right now. WBA as well. Walgreens Boots Alliance. This stock's been an absolute disaster, but it's finally getting to the point where it's so exhausted that the odds are really high that it's going to start bouncing. And so it's an opportunity to do something. We can buy a call, but the higher probability trade is to do a put spread, a bull put spread in this particular case. It's a bit of a low price stock. I would prefer to do it on Nike because Nike, trades, around $70. I typically like to do this in stocks that trade above $40 or so. So Starbucks. So here's Starbucks. This one got extremely oversold a number of weeks ago. And again, instead of, I can buy a call by all means, and then the stock rallied 15%, but I could just sell a bull put spread. It just gives me a higher probability of making money. Because if the stock goes up, I make money in that case. If it goes sideways, I make money. And even if I'm totally wrong, and typically a stock can go at least 5 to 8% against us, and we can still make money. So in this case, the stock could go all the way down here, and I could still make money. Who likes the idea of not having to be as directionally correct? Does anyone like that idea? Because it's really stressful to have to be absolutely correct all the time in terms of timing, directionality, and magnitude of the move, I find. And so I'm going to go through a lot more of these here in just a second, but I want to share with you, if you guys want access to this, I'd like to give you lifetime access to this indicator. Let me just show you, and then we'll come back to all this. I want to make sure we look at a lot more tickers. But some people before were asking, how do you use this intraday? So this is intraday. This is yesterday. And so the NASDAQ 100 yesterday, or the futures as well, as showed, you got extremely overbought. So as soon as if you zoom in close here, as soon as the arrows are done, so on that bar right there that I'm hovering over right now, that's when the arrow no longer printed. At the end of that bar, that's when I would buy a put, or that's where I would, short the futures if this was a futures contract, right? And then typically I keep it on for about an hour. In the case yesterday, it was so strong it could be kept on all day for the rest of the day. So if you look at the futures, for example, or look at the SPY, it's the same exact happened in the SPY yesterday. So as soon as right there at the end of that bar right there, I would buy a put. Or again, if it was the the S&P 500 futures, you can see right there, we would buy short the futures. Does that make sense? Right there. These opportunities happen every single day, intraday and on the daily chart. So for me personally, I like to use this intraday on stocks and futures. I like to use it with options. And then for swing trading and for income, I like to use it with these credit spreads here on the daily charts. Like for next week, I'm itching to consider doing something in Nike on the bull put side. I'm itching to do something on FedEx as I showed you before, on the bear call side, right? And again, you can see what last time happened when FedEx got overbought. And then again, not just a little bit overbought, but really overbought. These are on the intraday. I like to use 5 minute charts. Let me just quickly share this with you so you can kind of get your head around this and again, I'll look at a lot more of these examples. But if you are interested in this and if you'd like to get access to it, I'm going to quickly drop the link here for you. But just so you know, basically the way it works is it's lifetime access for just $397. This includes our chat room. It includes our members webinars where we give you trade alerts and the chat app as well. But here is how you can take advantage of it. It's 50% off for you guys here today. So it's a lifetime deal. So for life, you only one time today pay $397, and your lifetime member, you have lifetime access to both the cloud-based version, so the web browser-based version of the indicator. Also, you can install it on some platforms like Thinkorswim, TradingView, NinjaTrader, and some other places I'll show you in a minute. And so for that, you get access to the indicator, to the cloud-based version, to our member webinars, and the chat room where we give you live, real-time, actionable trade ideas. It's studytradersecrets.com/timing. So if you want to take advantage of that, make sure you do that here today. We're going to open it up for 50 people here. And you can also use PayPal, meaning you can finance it with PayPal. I think they allow people to finance it down to like 20, 30 bucks a month or something like that. So that's available as well. But I'm going to go through a lot more tickers here in a minute. I just want to quickly drop this so you know, because some people tend to have to run sometimes. So it's only going to be available right now here in the session at this price. Afterwards, it goes back up to the regular price. So you will want to take advantage of this here. It also includes an options credit spread course, our member sessions that we do again twice a month. I'll talk more about that minute. Forever lifetime access to the indicator, the cloud-based version, and the browser-based version, and the install version. We even have a course on iron condors as well. And of course, I mentioned the chat room, and yeah, no, that's I think that's that. So let me just go back to the indicator and just kind of answer some of those more questions. So again, just yesterday alone, if all I did I don't know how many people, is anyone here a futures trader? Does anyone trade futures? Right? Futures or options or just straight ETFs, right? So if all I did yesterday on a Friday is short one futures contract right there, where those arrows stop printing on that bar right there, and I kept it on for 1 hour, let's say if I kept it on for 1 hour, I probably would have made about 1,500 bucks. If I kept it on for towards the late afternoon, I probably would have made 3,000 bucks. On the NASDAQ 100 or the SPY, let's take the SPY because I think people are even more familiar with that. If I would have bought one put option yesterday and kept it on for an hour or two, or even in the rest of the day, I probably would have, it's probably at about a 30-40% gain. So that intraday, I like to use a lot on futures as well, personally. And but let's go back to the charts here. I want to give you some ideas. I don't know if you guys are interested in this, but would you like to give me like an idea of how I might look at like an opportunity, like what I would look for maybe next week in FedEx, like what kind of spread I would put on? Is anyone interested in that? I'm happy to do that right now for you if you would like. And also in Nike. Yeah, exactly. So what we do is we wait. So our next members webinar is next week. Let me just quickly tell you, our next members webinar is next week on Wednesday, I believe. It's on July 3rd. Yeah, that's next Wednesday. And I'm going to teach you exactly how that works. But yeah, we wait for the end of the day. So let me share this with you. So and by the way, if you have any questions, you can always call the phone number. We have 401-203-7389 if you have any questions and if you want to order there or something like that. But what we typically is we wait. So like, let's go back to Nike. Let me just show you the example in Nike. So Nike right now is getting extremely oversold, as I showed you a second ago, right? So this is Nike right now. And What we need to see is we need to see a day when the error is no longer there. So basically the next morning, and we get alerted on here. So if this is my watch list, I'm going to get an email sent to me every morning. So I don't even have to open this if I don't want to. Okay. Yeah, Bob, you're going to get email credentials sent to you probably within minutes from now. And if you don't, somehow it's probably in your spam. Otherwise, you can call 401-203-7389, but you'll definitely get it. Definitely, definitely. And then make sure everyone who's joining right now, make sure you join us next week in the next members webinar. That'll be very, very important. We have a trade open right now in Apple. Would you like me to share with you what the trade is we have in Apple right now? I'm happy to do so if you'd like. In fact, I will show it to you. But in Nike, at this point, I would want to use September options, and I'd want to go at this point. I can go out a lot farther in money. I can probably go as much as I could probably sell a 65-60 bull put spread. I think please is probably the what's missing there. Yeah. Yeah, on the page. Yeah. Okay. All right. So let's go in here and show you this. So in Apple right now, we have the following trade open. I'll show it to you from our chat app. We gave this in real time to our clients. So we have, let me bring this over. So, and by the way, so this trade, just so you see, I'm not making stuff up. This trade yesterday that I'm showing you here in the Vertical X Pro, like I showed that to our members in the chat app in real time, right there. This is proof. You can see the timestamp, right? Okay. I have my I was in Switzerland for the past few weeks, so I have the European timestamp. So this is 9:17 a.m. Eastern time at 3:17 European Central Time. So this was 3:17 p.m. is 9:17 a.m. Eastern. Or 10:17, I think is what it was. 10:17. Anyway, and then you can see how we narrated it. And oh no, sorry, no, that was the afternoon. I apologize. I apologize. No, that was at the end of the day when we said, hey, the trade is now finished. This was I showed it in real time at 10 a.m. in the morning. My apologies. Yeah, this is a Slack channel, is what it is. We like to use Slack because it's people like to have that on their app, and we typically use Slack. But let me show you the Apple trade. So the Apple trade is here. Specifically here, this is the exact trade, and this is the chart that we showed people last week. So we currently have opened actually we have August options right now. So we're short the 225 230 bear call spread right now. That's what we have open right now. And we're already at 30% profits, meaning at 30% of the initial credit. We received $1 for this trade. So we're currently, I think, at 75 cents. So we can probably close this on Monday for profits. That would be it. So yeah, this is an app. You guys can install this Slack app on your phones, on your tablets, on your computers, laptops, whatever. And we share real-time ideas there throughout the week, whether they're day trades or they are. And you can see I just told someone this morning that we're already now at getting near the profit target. So that's what's taking place right there. Let me quickly get back to this just to make sure you guys have seen this. So you can get lifetime access to all of this for just $397 right now. That includes the indicator that you can install. Let me quickly share with you where you can install it on. You can install it on multiple platforms, but also you have the web browser-based version, which is the one I've been showing you here today. That's included for life as well. And it's 50% off today. After we're done here, it's going to go back to $797. So if you want to save 50%, you may want to do this here sooner rather than later. $397 for the indicator, the scanner, the member webinars, the trade alerts we give in the member webinars, and the app where we give you trade alerts as well. And there's courses included as well that we have available for you to educate yourself on. Which platforms? Let's quickly show you this. So if you want to install this, you can install it on the following platforms. Like if you want to day trade with it, you'll have to install it on, let's say, Thinkorswim or like NinjaTrader or TradingView. It also works on Wealth Charts and Metastock. Those are great partners of ours as well. Okay. I'll teach you exactly how to pick the strikes like in the member webinars. And so the next member webinar is actually tomorrow, next week, excuse me, on the 3rd. And exactly your question too, when do you get out? That's exactly what the member webinars are for. So the member sessions, which we do twice every single month, there are extensive, and you will be able to join the next one next week on Wednesday. You'll be alerted on that, and you'll get an onboarding phone call right away as you join. At this point, probably on Monday because it's Saturday today as well. So you'll be in good hands. But you want to make sure you join here if you want to join that members webinar. Otherwise, you're going to pay twice as much, and you don't want to do that. But again, for next week, I think FedEx is a good one on the bear call side. Rivian is probably getting there as well. You can see last time Rivian got oversold. What happened? The stock then very quickly rallied about 32%. And again, we only keep these trades on for 1 to 2 weeks typically. Right now, we got overbought a few days ago, and the stock is now already down 8%. So literally within like 1 day, I would have made my profits already. So there's a lot of this stuff happening right now. And the scanner here allows us to create watch lists. So if you want to create a watch list with our cloud-based version here, it's super simple. Like you can go in here, you create a new watch list, you give it a name, whatever, right? You click done, and then I can recreate my portfolio in here. So let's say I like FedEx, right? Actually, I think FedEx is already in my portfolio, in my watch list. Let's say I like, no, I think it's not. So I'm going to add it oh no, it already is. But Nike, I think Nike is not. So I'm going to take Nike and I'm going to add it into my watch list or my portfolio. And now it's been added to, now it's been added to my watch list. And now every single time that stock gets extremely overbought or oversold, I am going to get alerted. Does that make sense? Right? It's really helpful. And I don't know, are there any specific sectors that you guys are interested in? Is there anyone here that likes only, let's say, I don't know, industrial stocks or tech stocks or maybe even just futures? If you can get very granular in here if you want to. Let's say you only cared about ETFs, right? Let's just for argument's sake, right? You could go in here and look for the overbought, oversold opportunities right away. Anything that's 0 days old is brand new. Anything that's 2 days old is a signal that came 2 days ago, like Rivian, right? And so you can get very, very granular here. And the opportunities are every single day. So I typically like to start off my day with looking if there's a potential day trade. And that's obviously not everyone's a day trader. I'm not really a big day trader. Typically busy managing the portfolios, but when there's an opportunity like yesterday, we like to make sure we're on top of it, because those are really juicy. Let me quickly go back to this from before. Yeah, the link is steadytradersecrets.com/timing. And again, it's $397 lifetime. It's not a monthly fee. It's not a quarterly fee. No renewal fees. It's just that. It's just $397 and you have lifetime access to it. And that is all. And you'll get access immediately also to the chat room that you can then the chat app and again, the members session next week is really important. I would encourage everyone to join that as well. On Apple, are there any questions on that Apple trade that we currently have on? Does anyone need further clarification on this one? We gave this to members in our last members webinar 2 weeks ago, and then I sent it to them as well in the chat app, so they had the chart and the specific strikes of the options. So that's what we do for our clients. And again, I think what's important here is to realize that the market algorithms have gotten extremely smart, meaning it's no longer enough to just use a MACD and RSI. Like those are standard things. Like the algos are way too smart for that. We need to go above and beyond, which is why it it took us a long time to develop this. But once we figured out where the algorithms themselves stopped buying, like Apple in this case, I mean, and you can see it literally top ticked Apple so far for a couple of weeks, and that's all we need. It's all we need to make money, right? We're already at 30% profits here in this particular trade. And so next week, again, I'm looking for FedEx. I think there's an overbought signal that's going to happen. That's going to become qualified soon. And potentially Nike on the bull put side um, becomes interesting as well. Intraday, uh, I am sure next week we're going to get a lot of intraday opportunities, probably in the indices like the SPY, the QQQ, individual stocks for sure. I mean, there's no doubt about it. Um, like AMD, for example, yesterday, if you guys follow this, had the same exact thing happening. So check this out. So this is AMD yesterday, 5 minute chart, and you can see that it warned us, be careful, it's getting overbought, it's getting overbought, it's getting overbought. Okay, and then finally it said ready. Okay, now it's ready. The stock's done going higher. And then from that point on, you can see the stock essentially dropped 3%. Okay. I'm not quite sure, Bob, seriously, what you want to do, you want to come to the members webinar next week. I don't want to jump the gun here too much, but I'm not sure. Um, it's very sensible here to go into a whole lot of detail. What you need is you need an end of day. What we're looking for FedEx. So for next week, Bob, and we're going to talk about this in the member session on Wednesday, so please join that. We need a day when the arrow is no longer printing, right? So FedEx still, this indicator is still telling us, be careful. The stock is still over. It still may go higher. It's not yet done. We need a day when the arrow is no longer there, right? So now for the past 3 days, the indicator has been warning us, just like it did last time. Watch this. Just like it did last time, right there. It's been warning us, be careful. The stock, it's getting overbought, but it may not be just there yet. As soon as you have a day when the arrow is no longer there, so like on March 24th, that's how that's when we put on the trade. Does that make sense? Yeah. Yeah, Bonnie, the link you have to use is this one here, steadytradersecrets.com/timing. That's how you get the, so you should be, so right now, if you use that link, you should be paying $397 as opposed to $797. Okay? Yeah, and that's right, Bonnie. I'm looking at it. Looks like you did $397. That's the price you paid. That's the discount. So the amount you just paid, Bonnie, is $397. I can see your receipt. You're good. You're in. You're gonna get the welcome emails. I'm just checking here for you. Okay, you're all set. Yeah, and let's see here, Bob. Just yeah, come to the members webinar. We'll show it all to you. It'll be all good. Okay. Has this been helpful, folks? Can you guys see that there's a process behind this that is, you know, that works? And again, it doesn't matter whether you're day trading um, or you're using this for swing trades. The point is we need to find points in the market where things get extremely overbought or oversold. And then again, to me, it's the consistency here that matters very much. I want to be able to do something on a very consistent basis. And there are new signals here every week and intraday, definitely every day, right? So, and right now there's a ton of stocks getting overbought and oversold. And again, not a little bit overbought, oversold, but like a crazy ton overbought and oversold. So once you join, you're going to get the login information sent to you, and then we will look forward to seeing you guys in the members webinar next week. And the onboarding session, you're going to get an onboarding phone call probably Monday. They will make sure that you are signed up for the member session on Wednesday. They will make sure that you know how to access the chat app and how everything else works. And then I'll go through the details of the indicator and everything in the member session on Wednesday, which we do twice every single month. And that's how we do this. So I hope this is helpful. So FedEx for next week on the bear call side, Nike and the bull put, and again, Apple is one that we have on right now. We're probably going to close by the time the member session comes along next Wednesday. That's what we have on right now, and again, so far it's nicely profitable. So you're probably gonna get out of this one soon. So um, that's really all I got. I don't know, David, if you're here, but if there's any other questions, I'm happy to answer them. Otherwise, I thank you for your attention and have a great weekend.
Yeah, that was great. A ton of good info again. So looks like
Perfect.
we're very interested and yeah, had a lot of good questions. So
A lot of great questions. Yeah. Look, I think the point here is what we're seeing is a lot of people are using very standard sort of indicators. Again, the stuff that comes with every standard charting platform. And the algorithms out there are fine-tuned to basically take advantage of those. So we have to get a little bit more sophisticated. And so when we develop this,
mm,
we it takes a long time to develop this kind of stuff, but once you see where the algos actually are sensitive and where they stop buying or stop selling, it becomes a much more repeatable process. And so that's what this is all about. Cool.
yeah, that's excellent. That's a great indicator for people.
Perfect. Thank you, folks,
All
and
right.
thank you, David.
So
Have a great weekend. It's
yeah,
great to be here.
any other last minute questions from anyone? I just want to thank everyone for coming in on a Saturday. We don't do a lot of Saturday events on timing research, so it's a good bonus education
Yeah,
event.
and for those
So,
people that are joining, just make sure you join in the member session next week. It's always good to join those, particularly when you start, just because we can address all the questions. It gets everything out of the way, and then you can it's just then it becomes very, very repeatable in terms of the process. So
all right, sounds good. And if you want to review anything from this session, I will have the recording on timing research as soon as I can get it processed here this morning. All right. All right. Thanks, Serge.
thanks, David. Have a great
Thanks
weekend.
for coming back.
Thanks,
All right.
everybody.